Welcome back to Growth TV and ACG Production. I'm Carolyn Vallejo, and here to share some insights into Q3 M&A data and what it means for Q4 and beyond are Scott Lynch, partner with Forbes Mazars, and Bob Dunn, managing director of GF Data. Bob and Scott, let's jump right in. What are some of the high-level takeaways from the third quarter?
Thanks, Carolyn. Third quarter, we saw a slowdown in deal volume tracked by GF Data, dropped down to 70 reported deals by our contributors. And again, that's for PE-backed transactions with enterprise values between 10 million and 500 million. It's well off what we saw in the second quarter. We tracked 102 deals, and off what we saw in the first quarter with 97 deals completed. Now, historically, this is kind of in keeping with the annual trends that we see. Third quarter generally sees a slowdown in deal activity, which is largely related to summer being a slower period of time. I think Scott and I were talking about before this, and we'll probably talk a little more about it, but the election likely impacted as well. We also saw a drop in average multiple across those deals, going down to 7.1 times trailing 12-month EBITDA from 7.4 times in the second quarter. So a lot of the signals not looking all that positive, but again, historically, it's a lower volume quarter. And I think we did highlight in the reporting some trends that are likely to make for a more vibrant fourth quarter and what we hope to be a very, very solid 2025 on it.
Yeah, I would probably echo his comments. I mean, I think the election, the uncertainty around that definitely, slowed things down a little bit. We also saw, just uncertainty around interest rates and when they were actually going to drop. I know we had some drops, but it didn't drop as fast as people expected. And so I think people sat on the sidelines a little bit during the third quarter. It has been more difficult to get deals done in general. So all the deals that we're seeing are dragging and taking longer to get accomplished. Probably also saw the hurricanes have an impact, and especially in the region where I live in North Carolina, we saw some deals get delayed from going to market because of that. Also in Florida, saw the same thing. And so I do think that those impacted us as well.
Yeah, I think that's a great point, Scott. Definitely major impact from the hurricanes in the southeast on it. In terms of more positive trends on it, one thing we saw in the first half of the year, while deal volume was high, and as of now, the 2024 is tracking to be about 15% higher in deal volume than what we saw in 2023. And I ultimately think it will surpass 2022 as well. So being the second highest we've seen in the last 4 years, with 2021 being a very, very much a high point at more than 500 transactions tracked. But I think we're starting to swing back toward that. In terms of positive signs, high volume of add-on activity in the first half of the year. We saw 44% of deals tracked were add-ons, which is about 10 percentage points higher than what we saw in 2023. That trend started to reverse a bit now. So through the third quarter, 42% of the transactions we're tracking are add-ons. That means the third quarter transactions had much more platforms represented in it, which again is a positive sign. We're also seeing interest rates come down, as Scott mentioned, maybe not quickly enough, but senior debt's now sitting at 9.1% on average, which is well off the 11% interest rate we were seeing in the fourth quarter for senior debt across all transactions. And the other component, we track above average financial performers in our database, and we're seeing more activity in the above average financial performing companies actually getting transactions completed and starting to go for higher multiples on it. So I think that's a positive sign as well on it. Part of what we saw in the first half of the year, high deal volume, but again, it was focused on add-on activity because debt markets were still a little bit uncertain.
I think the platform deals are something we've been waiting for, and it's finally seeing some movement there. There is still really long hold periods for those, and we're anticipating we'd see more of that next year. We'll talk about that a little bit more later.
Mm-hmm. Yep. Okay, so a bit of a mixed bag, but Bob, you mentioned Q4, and the new year is quickly approaching. So what did the Q3 numbers maybe tell us about the fourth quarter and how it might play out, and maybe where we'll end up at year end?
Yeah, so I mean, I think getting the election out of the way is a positive, and generally we're going into what I would characterize for the most part as a pro-business regime. So I think regulation will be less of an impact. The flip side of that is, are we going to follow through on tariffs, and what will be the impact on that, particularly for those businesses that need to import raw materials from overseas? The other question on it is the question about employment and some of the folks that are handling a lot of the stuff in the food service industry. Other areas on there are potentially going to be deported, which I don't know if that's going to happen, but that could definitely be a strain on business as well.
Yeah, I would just say that unfortunately, there's still a ton of uncertainty of what's going to happen, and people are probably going to wait to get a little bit more clarity on some of these issues that Bob raised. I mean, we know the regulations will go away to a large extent on some things, but really don't know. I mean, I guess yesterday they announced some of the information about what might happen with the tariffs with Mexico and Canada and China. So we do see that those are probably going to happen to the extent they've laid out. Not sure, but it definitely puts a different lens on a deal when you have those countries that you're getting raw materials from or supplies, whatever you're getting from those countries. It's definitely going to impact you. And if you're a distributor that's selling through, definitely going to have an impact. And then how does that impact inflation potentially if we're raising prices? Because a lot of those tariffs are just going to get passed along. And so that's going to potentially have an inflationary impact, which also might impact our interest rates. So, it's a lot of uncertainty still that I think is going to cause the fourth quarter to not be as much of a bounce back quarter as we might have anticipated, in a normal year.
Yeah, I would completely agree with Scott. I think the actual impact of these things are starting to be looked at by business. And I think Scott mentioned that diligence is already at, peak period in terms of duration on it. And I think the investigation of the impact of tariffs for those businesses that are going to be affected, should they come through, is definitely going to push out diligence a bit longer and may delay some deals getting closed as well. I will say, though, on the positive side, we are starting to see some private equity exits, which we really haven't seen in the last 18 months. I think that will help get the market a little more bullish, not only for private equity exits, but also I think it starts to look like a more receptive pool for individuals and families to start to go into. I think there's been a lot of folks waiting it out, looking for a relief on interest rates and potentially some clarity in terms of the election. I think that will foster more activity. Whether that comes in the fourth quarter, I think Scott makes a good point on all the potential impediments there. I do think, though, there's enthusiasm for what 2025 will look like, and I think we'll see increased activity compared to 2023. Whether that sets in the first quarter or not, remains to be seen, but I am optimistic on 2025. Scott, I don't know about your thoughts on that.
I mean, we usually use the word optimism here, so this is an optimistic group, and so it'll be interesting to see. I mean, I do think that we hear investment bankers saying there's a lot of deals that are getting ready to go to market, and the portfolio companies have to be sold at some point, and so we do anticipate that there'll be more deals in 2025. So we're looking forward to that.
Okay, we of course love the optimism. There are a lot of moving parts here, though, and everybody would like a crystal ball, of course. Looking into 2025, are there any additional trends that you might see coming out of the data for middle market M&A into the new year?
Yeah, I mean, I think, increased platform activity we already talked about, private equity exits we've talked about. I think those are both positive signs. I stressed it, I think, the last time we talked here, but LPs are seriously, that's the investors into the funds for private equity, are concerned about the lack of returns coming from their funds that they're invested in. So I think that's top of mind for private equity firms. They want to get some realizations. I think they've been holding out for a better environment, one where they can get a fuller valuation, but I think, they really need to exit some of these investments at this point. And again, that will generate some activity on it. And I think, when there's private equity involved and active in the market, that will draw out more participants from the families and individuals that are out there, and hopefully bring them into play.
I would just say traditionally after an election that there is M&A activity once things kind of get going. And so we would expect that to happen. There's a lot of people that have been waiting to sell businesses, whether it's families or private equity funds. And so I anticipate that continuing to be a big part of what's happening out there. And so, I think there are a couple industries that might struggle a little bit. We've seen healthcare services, for instance, being a hard place to be. And we see that probably continuing to be an issue. But there are plenty of businesses that we see as bright spots, and we know it's going to be a pretty nice year. And so we're looking forward to it.
All right. Thank you for catching us up, and we will check back in next quarter.
Great.
Thanks for having us, Carolyn.